Hello, everybody, and welcome to the Cyclical Investors Club. My name's Corey Kramer. Today, we're going to be taking a look at Apple stock, which I haven't looked at for a while, but I had a couple requests for it. So we're going to review it today. If you have a request you'd like me to take a look at, just put it down in the comments section. I'll get the ticker on the whiteboard behind me, and eventually I'll make a video for you. If it's a stock that's in the S&P 500 like Apple, I post those on YouTube for free. The rest I post over on Patreon. And for $5 a month, you can request stocks that aren't in S&P 500. I also post all the same videos that I post on YouTube over there. And occasionally I'll post some extra videos kind of on books and chapters that I'm reading and just kind of my thoughts on them. And people have seemed to like those. I just sort of do them whenever I have time, though. There's also a free tier over on Patreon, which is one of the places where you can get those extra thoughts and videos and so forth. And over time, I'm going to add some more things there as well, but we're just kind of building everything up slowly. If you do join Patreon at the $5 tier, you can also get a big discount if you ever decide to join the full Cyclical Investors Club service over on Seeking Alpha. And I have all those links down in the description, as well as a 25% off affiliate link for fast graphs, which you'll see me use here in this video. As always, this is not individual investing advice. This is just how I analyze stocks. So when I first, I did like a little test run of this channel in the first 3 months of 2021. And then I kind of took some time off. I randomly posted a video or two until I relaunched last October and into like a real channel where I'm posting multiple times a week. And one of those, the structure that I was testing back then was each time I would have a sell video on a stock that I thought was overvalued but high quality, and a void video where there's just some factor of the stock or business that I thought was risky. And then I would also have a buy video that went along with it, with those, and I kind of released them all at the same time. And I tried to make them as related as I could. Sometimes usually it depended on what was available to buy at the time, because the market was pretty expensive. But I had a sell video on Apple. Let's see, it came out January 31st, 2021. And at the same time, my alternative was at the time Facebook, now Meta. So I said, Apple's overvalued. Now's the time to take profits. And I think that was around, we can get on the fast graph, around right there, about the end of January of 2021. And I thought Facebook / Meta was a better value. I'm long Meta still from back then. And I think I bought it right around that time, actually. So let's take a look at how that has turned out. Apple stock is definitely up since then. Let's see, I made a little find it here. I just made a little copy of the returns here. So this is from that January 31st date. So Meta took a decline when they decided to become Meta, and then they've recovered since then. So Meta's up 84%, Apple's up 50%. So and it's almost exactly the same as the S&P 500. So Apple didn't really sell off too much. It's kind of maintained where it was relative to the S&P 500. And Facebook has been much more volatile, but now it's come back and actually performed better. And I still own it. I never sold it through that downturn. So it's a little lesson. I mean, I don't know how many percentages it's up off the bottom, but if you think you have a good pick with a reasonable future, at that particular time, I just committed to holding Facebook long term and wait and see what happened. And it turned out that worked out pretty good. So back to Apple's current valuation, I think it's pretty similarly valued actually as when I wrote the sell article, but we can get into the details here. So one thing I would say basically since usually I start these graphs in like 2016 or 2015. Apple had a giant year from COVID because everybody, including myself, I don't know how much Apple products I've bought since 2020, but thousands of dollars. So I am one of these people that drove their sales for 2020 and 2021. But this is definitely a COVID stimulus bump and a pandemic bump. And so if we kind of pull this out, and then 2018 was a big tax cut year. So if we take those out, Apple really hasn't grown their earnings very much because they've been buying back shares. So even these like single digit earnings growth years that are not pandemic stimulus or tax related, they bought back so much stock that really their earnings growth has been flat for a long time. If you look at revenue growth and you take those out, you can see it. But they definitely, one thing I have been impressed about Apple, and I should say I owned Apple from mid 2012 until right before the pandemic. So right in here, I took profits 500%. So I've made I'm not an Apple hater. I made 500% on Apple before I took profits, and the stock has gone up more. But I don't think I would have anticipated, the extra 70% earnings jump that they would have got. And honestly, the stocks that I bought during the pandemic in March had performed just as well as Apple has since then. So on average. So I don't feel too bad about selling it, but I'm definitely not an Apple hater. I just think that it's overvalued, and we can look at why. Now, I assume for my future earnings, and I think this is very generous, a 10% earnings growth rate. So if you look at what analysts are expecting, they're looking at 8% this year, 9% next year, and this is per share basis, and then 10%. So I'm actually more optimistic on Apple's potential earnings growth than analysts currently are. Apple trades at a 30 PE on, we'll call it 10% earnings growth. So they usually keep like cash and debt balanced. So there's not really any debt adjustments that need to be made. I mean, I haven't looked at it for a while actually, so maybe it's changed, but nope, almost exactly the same. See, market cap and total enterprise value about 3 trillion. So it makes it pretty easy to actually analyze Apple, and you really just have to think bigger picture a lot of times with it, I think. So if we take that 10% earnings growth rate, we take the almost 30 PE here, that gives us a 3.29% earnings yield. So the earnings yield is the PE ratio inverted, so earnings over price. And the way I like to think about that is if I bought Apple's whole business for $100, they would earn, I could take out $3.29 each year in earnings from my investment. And then if that grows at 10% a year, I usually pull the first year forward. So I'd get $3.62 on my $100 that first year. And I like to take that out 10 years. So if we go out 10 years, that would grow to about $57.70 or $157.70 if you include the initial investment. And that produces about a 4.66% CAGR. So cash yields 5.3, 5.2% right now. On the short duration, like treasuries, my threshold for selling when something's overvalued starts at like below 5%. So this would definitely kind of, you would want to think about it. I think I sold mine, so we already kind of know. I used a little bit different method back in 2020, but and that's with, I think, a generous earnings growth estimate of 10% for 10 years. So you can see the 3-year revenue growth is slightly under 10%. So that's 3 years cumulatively. So think like 3% revenue growth per year for the past 3 years, over the past 3 years. Very slow. That's actually slower than inflation by a little bit during that time. So really, Apple is a very slow growth to no growth business. But here's what I would think about. The question is, how can they innovate in the future? What potential do they have to innovate in the future, develop new growth drivers? They have the new Vision Quest or whatever it's called, the headset. It looks pretty cool. I haven't tried it. But so maybe that at one point becomes like a big, like a people really want it, the demand for it rises, and that becomes the next big thing. I mean, they have AirPods and iPads and iPhone. I mean, obviously. So the wearables, I guess, is what you would call it. So the potential's there. Apple Music, the subscription, the Apple TV, right? They have a lot more subscription revenue and things coming in, but they aren't, on the whole, they aren't really growing when it's all said and done very much. So to me, it's still expensive that, if I owned it, I wouldn't sell the whole chunk, but I mean, it would be a place I would be taking profits from. Now, in terms of the risks, while there's always the kind of, it's not, well, if you sell it, it's a risk. It's it's opportunity cost if they come up with a new product and it's a big hit, right? But when you look at the China sales, when you look at the difficulty that China's economy is having, when you look at the US-China tensions, I think that risk at least balances out the opportunity cost potential for selling the stock. So for me right now, I mean, I think I'm being generous with Apple, and it's still a sell based on valuation. And I love the company, but yeah. So that's kind of my thoughts there. Now, in terms of when to buy it, if we take these same assumptions, I have two different methods. One's a recession method. I used the 2018 drawdown for that one. We're looking right about $100 per share, and then basic valuation is right about $100 per share to become a buy. That's with a little bit of a margin of safety. Midpoint of fair value, I have $130 a share. So if a person was like, hey, maybe Apple has, when I bought it in, I think it was 2012 or 2013? I think it was halfway through 2012, but it might have been, let me look at the fast graph real quick, because I ended up getting it almost at the bottom of this little dip. So when was this? It was actually 2013. I think it was the first day of July, this first week of July. Yeah, almost right at that little bottom there. It actually went a little deeper before that. Was when I first bought the stock. And at the time, everything was super negative. China, people were jumping out of buildings in their factories because the working conditions were so bad they had to put up nets to catch. Like, these are the stories and everything that everybody was telling. And I just bought into that. I didn't really worry about it at all. So, but now I think the risk is a little bit, well, I think it's significantly higher. I just think geopolitical issues have changed. Times have changed. So I don't know what's going to happen, but I think the risk is certainly higher. But let's say that, that kind of reaches, some sort of crescendo, and it sends the stock price lower, and you think over the long term, Apple will find a way to work it out, whether it's moving some of their production other places, whether it's finding new markets, whether it's coming up with new, all the other stuff I said earlier. If the stock does go down like that, then that 130 is a price that a person could come in at, I think, at fair value and start building a position. And then if it hit 100, I would probably be in myself again. So that is my thought on Apple. It's a pretty complicated in some ways at first, but once you make up your mind on a couple big issues, one, what's the geopolitical risk? Two, what new growth driver could they come up with? Because they've done an excellent job retaining these pandemic. I wrote an article, and I might have another video out, and the stock price did fall a lot since that peak. They did have a significant drawdown of like 30%. So I wasn't completely crazy for worrying about that. Yeah, it was about 30%. But when you look at their earnings, they actually managed to hold these. They didn't come down. After the pandemic, if you look at Meta or Google, you can see that they actually did fall, right? Earnings actually did fall. If you look at Google, which were the other ones that I was writing about at the time, those earnings actually did fall down. And this is amongst massive cuts. I mean, I thought this was going to be worse than it would have, but they cut tons of expenses. They cut tons of people. So they just had a lot of overhead they were able to cut and keep those earnings from dipping deeper a couple years ago or a year and a half ago or whatever. So they did a good job of that. And Apple has done a good job maintaining the earnings level that they were able to achieve from the pandemic. So I think that's a really positive thing for them. But yeah, for me, there's just other opportunities in the market. I don't think there's a reason that a person has to pay that much for Apple when you can hold cash and it'll be safer and you'll get a higher return probably. Now that it's at a 30 PE, hey, I mean, what's Costco at? I mean, we know that stocks can go. If Apple has like a good year, like a breakout year where they grow earnings 15% or something, I mean, hey, why couldn't it trade at 50 PE like Costco is? I mean, I don't know. It can. But that's just not how I place my bets when I'm investing. I like to have the odds on my side. Back in 2013, they were on my side. Now I don't think they are. All right. So if you found this video useful, thought-provoking, hit the subscribe button and hit the like button. And if you have a request, put it down in the comment section. I'll get the ticker on the whiteboard behind me. Eventually, I'll make a video. Later.